Welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. And thanks for joining us here next week today, where we cover everything that we see coming up in the markets. We touch base on everything we saw last week and just give you an overall update. As you can see, probably from the quality of video that's coming through, I am still on the road traveling, so bear with me. Hopefully the sound's coming through pretty clearly. We'll get through today. Probably we have a lot to get through today, so let's dive into things. As always, keep in mind that everything that we cover here on these videos is for information purposes only. Always do your own due diligence or reach out to us. Go to mikeonmoney.com. We're happy to answer any of your questions about your portfolio or strategies or anything that we cover here, or any questions you might have. Do reach out to us. And we can see what specifically strategies or different portfolio suggestions might fit your particular situation. So with that, let's jump on to things. We always start off with a bit of COVID update. I was actually looking forward to taking this slide out of our weekly sessions, but I've left it in just because a lot of things are happening on the COVID front. Obviously, globally now is the bigger picture. You know, Canada itself. Everyone's pretty familiar with what's going on. Of course, travel has somewhat reopened for Canada. There's still testing requirements to come back in the country. They did make a change in British Columbia, or sorry, for Canada rather, that as of November 30th, if you're out of the country for less than 72 hours, you can come back without a PCR test. But that's and there's a lot of, I know if you're in British Columbia right now, there's a lot of confusion around that because of course the floods, the shortage of gas and other supplies that we're seeing around the lower mainland or the southern part of Vancouver. People have wanted to go across the border to get gas or supplies and then come right back. And there were some announcements made that people would not have to get their test if they were only gone for, I think they worded it as critical needs or required needs. So, for example, I think they were saying, people really require their vehicles for work and they need gas and they could go down there and get it and not require the test. But the border service don't know about those potential waiving of those requirements, and there's been a lot of fines being issued, over $5,000 fines for people going over the border for a quick jaunt. So that's happening in BC. Globally, especially around Europe, Germany's seeing a massive resurgence in numbers of cases. We're seeing that through Austria. We talked about last week, Austria bringing in some pretty strict shutdowns for people who are not vaccinated. If you are vaccinated, they're still fairly open. But if you're not vaccinated, very restrictive movements. And we're seeing that in the Netherlands, with a lot of protests taking place. But now we're seeing those numbers really, really spike in the US. And that's pre-Thanksgiving weekend in the United States, which is this weekend. So there's a lot of concerns about, much like we saw going into last winter, the numbers increasing. And we're seeing those, especially in countries where the vaccination rates are lower. Canada's still doing fairly well. Cross our fingers that continues. And of course, they're just approved the vaccine for children 5 to 12, and I know that they're getting those they're different doses, so those are having to be shipped out. And all the reports I'm hearing is those are coming out this week or next week, depending on where you're located, for kids 5 to 12. And of course, the booster shots continue on. The US has now approved booster shots for any adult over 18. So that, they started with age, they started with different requirements. Now it's all adults over age 18 are eligible for the booster shot. And see if they see what the uptake is on that, because of course the US is still lagging a little bit. As a country, they have spots where they have higher vaccination rates, but as a country, they're still a little bit lower. So we're going to continue to keep an eye on what's going on with COVID globally. It continues to be, unfortunately, a concern. And this travel season is going to be really, obviously, more and more people getting together, more and more challenges that could lead to. So we'll keep an eye on it. So with that, let's take a look at what's going on in the markets. We are looking coming up for this week, the manufacturing number, manufacturing index coming out, and also the service index, and also the Richmond Fed business activity survey. So what the outlook for business growth going forward, especially in the smaller business area, the mid-sized business, seeing what how optimistic they are for certainly the last quarter and heading into 2022. Stock futures edged down a little bit today, so we saw the markets off earlier this morning, not by a lot, but we've seen a bit of pressure off those highs. A lot of things driving that. Of course, it's I think we have to change a part of this weekly show to inflation watch, because it seems like that's the key theme that's overhanging the markets and will continue to overhang the markets for some time. And what that's going to lead to certainly into 2022. Obviously, Jerome Powell was renominated for Fed Reserve Chair. So at least the market doesn't like surprises. It likes the devil it knows. So no change there, no change in the outlook. So no big surprises for the market. So that from that side, it was good. But at the same time, the market kind of signaled, okay, well, he is going to stay in there. We're probably going to see those interest rates rise a little bit sooner than later. Later meaning 2023, sooner than later will be in 2022. So that's what we're seeing a little bit on the market. We're also seeing a lot of that negativity in the market around the big tech names. So if you look, we've been talking about that theme pretty much through 2021 here. From January on was that, the techs had a really good ride into the beginning of 2021 for coming through 2020. But some of that valuation, we've been recommending taking some money off the table, take some profit off the table in those tech names, and really look at those value names, right? The dividend paying, the more boring industries, because they tend to do much better. Industrials and things and financials tend to do much better in an inflationary market or a stagflation market, and that allows them to see their prices go up. While those heavy leverage growth companies that the tech companies generally are, don't do as well when inflation's out there. So that theme is certainly playing out, and we've certainly seen the tech names taking on bigger hits in the last couple of months, as we've seen the market just cool down a bit. Nothing overly concerning. Earnings season obviously still going on. We're expecting Best Buy to report, Medtronics and Dollar Tree, Dell Technologies, Nordstrom and Gap all reporting today, and we'll see a few more later on this week. Overseas, the stocks Europe 600 declined a bit. They're seeing inflation pretty hard there too. Really looking at, Germany might be one of the first, Germany or England, UK, might be one of the first ones to raise interest rates due to inflation here of the big economies around the world. Also there, Visa and Amazon have been, in a fight, and this includes all the credit card companies. We're just, Visa's at the forefront of it, and this is over fees. So if you watch me or you've listened to me or you've invested with us, Visa and Mastercard have been darlings in our portfolios. They've done incredible. I really like them. They're cash cow businesses. They don't own any debt. Where they do make their money is on fees. So every time you swipe your card, a piece of what you're paying goes to Visa or Mastercard as a fee from and the retailer is absorbing that fee. So there's obviously a lot of push to drive those fees down. It seems like the retailers have a bit of power right now with the shift to online shopping, which has to be done through a payment system of some sort, electronic payment system of some sort. And there's a lot more competition coming in there for Visa and for the likes of Visa and Mastercard out there. And so retailers are no longer kind of handcuffed to just say Visa or Mastercard. There's a lot of other options that they can use. So we're still seeing, there's not a big concern for Visa and Mastercard. We're still seeing the volumes go up. Yes, their fees might go down a little bit on those things, but all in all, looks they'll figure this thing out, and well in time before the holiday season's over. Living hand to mouth, and this goes, the gas crunch at the forefront of this in Europe right now. Obviously, the UK being, kind of the central focus of shortage of gas at the pumps. We're seeing it now in Vancouver as well for completely different reasons. But obviously, just trouble getting enough supply. Russia has started to increase their shipments into Europe to cover off the winter, demand flows. But it's probably a bit too late. And even if they get the supply, getting it to where they need it, the whole transportation or shipping bottleneck, still exists. And, a lot of that, not just in Europe, but in the UK, particularly all driven around the Brexit issues. So that's going to continue. So we're probably going to still see gas prices pretty high, despite, the oil price easing a little bit. We'll dive a little bit more into that when we cover off the commodities. U.S. families are planning big holiday celebrations. Everyone's been, cooped up for the better part of 2 years. And certainly last holiday season, families were certainly advised not to get together in large groups and weren't able necessarily to travel. So this year, certainly in America, the numbers are looking, it's going to be a massive travel weekend. And that heads right into, Hanukkah and Christmas and all the other holidays, part of the season. So they've really ramped up, the availability of the vaccines and of course the boosters, as I mentioned, and trying to reduce some of that worry of all of that travel and the festivities that are going to go around that. But I think the biggest problem is going to be is the debate at the House. I've talked to a lot of people who are getting together for the American Thanksgiving, of course, the holidays coming up. And, there's always some family members that are on the different side of the vaccination argument. And I think that's good. I think that's the biggest worry I would have if I was American right now, heading into a big family holiday season. I think there's already probably tensions around these holidays. And I think that's just going to add an extra layer. So that's a big part I'm going to keep an eye on. And obviously, we hope to not see a big surge in the number of cases. Other news going on, U.S. home sales climbed to a 9-month high, and we're starting to see a housing shortage, continue to persist. Now, bit of concern, obviously, especially when we talk about the U.S. Canada here, the same numbers are kind of coming out in Canada, but we have a very different housing market. We have a very different lending market for homes. And of course, we all remember 2007, 2008, where the housing market really caused that financial crunch, where people were just over leveraged because of the continued growth in the value of their home. And if you don't remember, it was just basically, people will buy a house for $300,000 and it was worth $500,000. So then they go borrow another $200,000 to buy another home, and then another and another, until they were so leveraged that, any weakness in that market whatsoever, the dominoes start to collapse. And that's what happened in 2007, 2008, along with, some more complicated packaging of those mortgages and reselling them on the market. So, even if you weren't in that housing market, you might have owned those mortgages, which collapsed. And, again, the dominoes just kept going. So still not really concern level, but we'll keep a really close eye on U.S. consumer debt levels as well, because their housing market climbs can cause other issues. U.S. deadline, the debt ceiling deadline is coming up and could be extended into January. So this is just, the amount of money that the U.S. Treasury can borrow without Congress and the Senate allowing for the debt ceiling to be raised. And they're quickly approaching that gap. I think it's mid-December that they're going to hit that ceiling. This is usually a normal procedure for the U.S. to just raise that and move on. Especially after all the back and forth over the recent infrastructure package that just got approved. But of course, with U.S. politics, nothing's ever that easy. There's always people pushing back, even though they know they're going to raise it, push it back for different reasons, political reasons. and to push different agendas. So we'll see that probably go back and forth in the news a little bit, coming to the deadline, and they'll get extended into January before hopefully they give a longer approval. CVC and HPS, two private equity firms, are looking to take a big stake in Authentic Brands, and it actually raised the overall valuation of Authentic to almost $13 billion. So they've agreed to buy a significant stake in that company, raising their value. So this is just continue the M&A activity, and you're going to see there's a few more out there that we continue to see that pretty much since mid-2020, M&A has been massively on the rise. And in fact, the first part of 2021, I think we set a record. Cybersecurity startup Arctic Wolf is seeking to hire an advisor for their U.S. IPOs. So they just, Arctic Wolf is a newer cybersecurity company, recently privately raised $4 billion, and now they're seeking an advisor to do an IPO in the U.S. They should really reach out to me. I've been following and investing in cybersecurity for the last couple of years. It's been a great position in the portfolios. I still think it's a continuous sector that corporations cannot afford to ease up on or spend or cut budgets in. So they should really reach out to me. I think I can do a lot for them to get their company name out there. Moving on, buyout firm Apollo is looking to acquire a stake in energy storage operator Broadreach. So Apollo, again, a private investment company, looking to take a 50% stake in Broadreach Power from the existing owners. And that results in about $400 million of capital being invested in U.S. energy storage and renewable companies. So we talked about some other ones, especially around the energy side over the last couple of weeks. Algonquin Power, which is one of the positions that we really like. They did an acquisition in the U.S. to expand their renewable energy. Obviously, renewable energy is at the forefront. I've talked about the challenges of the shift from fossil fuels to renewables. It just takes time, but this one's an interesting one because it's about U.S. energy storage or energy storage in general, because that's the big thing with renewables is storage because there'll be times when renewables create more power than you need, and then other times not create enough, and it's all about that storage. And storage is something that's come a massive long way in the last 10 years. Even if you think about, EV cars, electric vehicles, the battery's ability to store power for future use. And if you look at the range of the vehicles, and that storage technology has come a long way. And that's going to be huge. When you talk about investing into renewable energy, storage is at the forefront of that opportunity, because it doesn't matter how you make the energy. From a renewable standpoint, you have to be able to store it, to deploy it when you need it. So storage technology is going to be, I think, right at the forefront of this renewable move. And we certainly have exposure in our portfolios, and we'll continue to keep a focus on it as it grows. Much like I was just talking about cybersecurity. When we started a couple of years ago, it was not in its infancy, but it was, very early stage on the investment side. And as it continues to grow, continues to give very solid returns. And I think we're going to see that on the U.S. energy storage front as well. So with that, let's take a look at what's coming up this week. Dell Technologies, I mentioned, they're expected to report a rise in third quarter. Obviously, this hybrid work from home is continuing. Big boost in demand for products, especially for people working, upgrading their equipment at home, or even corporations to upgrade their equipment to allow people to work more at home. Because we have seen, obviously in 2020, that shift happened dramatically quick. And I remember in March 2020 talking to an exec at Dell saying that was the largest single month that they'd shipped out, laptops. The record-setting month for them for shipping out laptops. And that was corporations just trying to buy up whatever they can and get it into their employees' hands so that they could work from home. But that continues as more and more people, make it a permanent transition. And we're definitely seeing that where the employees now have a lot of power over corporations because, it was at one point, if employees said, hey, I want to work from home, and the corporation would just say, no, you can't. We don't do that. And, what are you going to do? You want the job, you're going to take the job. But right now, people are saying, I want to work from home. And if an employer says no, they're saying, fine, I'm going to go somewhere else, because it is a very strong job market for people to find, especially skilled employees. There's a lot of demand. We've talked about the earnings inflation. People get paid more for doing those jobs because employers just need employees, especially on the skilled side of things, to deal with the growth in their companies. But at the same time, employees are also getting better or different perks. And I think it was month of October was the highest number of people who voluntarily quit their jobs to take on new jobs in a record number of years. I wish I had remembered the stat, but it's been decades and decades before we saw that many people walk away from their jobs to start new jobs. And a lot of that centered around, environments, culture, and certainly the ability to work from home. So definitely Dell is going to continue to benefit from that. And we've already seen other companies like Microsoft, who's also in that space, do well with it as well. Data firm IHS Markit is expected to report, as I mentioned, the manufacturing number. We're expecting that to rise for November, as we've seen everything in the supply chain side of things. Just increased demand, trying to get product out. We saw it up in October, and we expect that trend to continue. And on the service side as well, we're looking for another slight bump up for November as well, as there's been really no slowdown on that front. Gap is looking at putting out their numbers as well. Should see a good jump as stronger sales and stronger demand for apparel as people get out of the house more and more. They have to take off the sweatpants and put on clothes, but still a lot of casual clothes, right? People aren't fully back at the offices yet. So, I don't think we're going to see, strong sales for, the Harry Rosens of the world, as, they tend to focus on the more formal outfits, but certainly on the casual going out suppliers. We're seeing the shoppers come back again in droves. So we should see some pretty good numbers. We'll keep a good lookout, though, on the supply chain impacts, because, of course, that's still a thing that's not going away anytime soon. Other top news in the U.S., KKR is looking to spend $37 billion as they approach Telecom Italia. So Telecom Italia, the main monopoly, kind of like their TELUS or Rogers over in Italy, was having financial problems, and KKR is coming in with $37 billion to buy them out and take them private. They've got a proposal on the table. So this will be one of Europe's biggest ever private equity buyouts. So KKR looking to restructure that company and turn it around. And Uber Eats, or Uber as a company, has decided to start doing tests in Ontario to delivering cannabis right to your home. So I guess you can be able to order cannabis right from the Uber Eats app, and then you can order your food afterwards when you get the munchies. So Uber's just leveraging their drivers' abilities out there. Hopefully people are smart enough to order the food and the cannabis at the same time. So they're testing that out in the Ontario market. We'll see if that expands outside of Ontario. I suppose Uber will probably want to expand it, but I imagine different legislations will have a different view of that. H&F, Hellman and Friedman Capital, is making a move, another acquisition into the health tech boom that's going on. If you've been following this, telehealth type of services have just rocketed during the pandemic. And not surprising, this is a technology, of course, that's been around for a long time, but healthcare around the world, whether you were in Canada or in the US, here in Canada, in fact, prior to the pandemic, doctors didn't even have the ability to bill, certainly in BC, the bill pharmacare or BC Care for a online or telephone appointment. Like there was no billing code to do that. That had to be created right away when the shutdown happened. And obviously telehealth has expanded massively. It's good for especially people who are disabled or elderly who can't get around as easy, but also in rural areas. I mean, this has been used in Africa for over 10 years, but the boom of people adopting and using it as they just realize how convenient it is and how helpful it is. So H&F is going to put 17 billion into Athena Health to take a stake in that sector as we still see more and more healthcare shift into the cloud. And I don't think that's going to end. We've talked about disruptive technology being a great area of investment. And nothing's more apparent than this particular one, where it's not new technology and it's not a new industry. It's just marrying existing technology, making an existing industry far more efficient and able to leverage people's time a lot better. And it just took a whole global pandemic to kind of push people forward into that area. But this is going to continue to grow. You see a ton of different apps out there where you can sign up for online health, where you can get access, instantaneously, basically, to medical professionals, to, even for prescription renewals or anything else. So we're going to see a lot more in that sector. U.S. lawmakers call for privacy legislation after Reuters put out a report, an article on Amazon quietly lobbying Congress to make it easier for them to get consumers' personal data. Basically, this was focused in the United States, but obviously it's a global thing. I mean, no shock that Amazon was doing this. Like, I think the bigger shock that they got caught this easily doing it. But Amazon, Facebook, this is all at the forefront. As I mentioned before, there's a big case in Europe over this. Consumers shopping data or the personal data that they put out there, maybe just for that transaction, but it's able to be tracked by these systems and then using it to either target directly to you or target a specific market or behavior. So the U.S., who's already putting forward new antitrust laws, are looking also to try to protect your personal data a little bit better. Tesla, always in the news these days, just put out details of their $1 billion cost for the new Texas factory. So we haven't followed it. Tesla is moving from California to Texas. They're building the new factory there. Obviously, big tax strategy for them. Texas giving them a lot of tax incentives to move there, and they're targeting a year-end completion, which, good for them. I've never seen a renovation go that quickly, but I suppose if you're spending $1 billion, the contractor is motivated to meet your demands. But they're hoping to get it done by the end of the year, and that's based on some public filings with Texas, and that's to probably meet their targets for the tax incentives that they're getting from Texas to move there. On the exchange front, as I mentioned, Jerome Powell got a second term as Fed chief, which reinforced the market expectations for interest rates. So it did help the dollar a little bit, the U.S. dollar a bit, just to strengthen up. Given, as I said, the market doesn't like uncertainty, so it weakened a little bit going into, was Biden going to change the Fed chief? And when they got the devil that they know, not that he's a devil, but no surprise coming down the road. It strengthened up a little bit to a 16-month high. The Fed also, looking at their inflation gauges, which they use as the PCE deflator, which might disappoint in October, as their numbers have not been keeping track with the CPI index. And that's largely due to the fact that there's some items that people use day to day, particularly housing, which is not in both indicators. So obviously that's something the Fed has to deal with, and it's just that continued watch on inflation. The bond yields did rise up a little bit. The 2-year note climbs to 0.638. and the 10-year benchmark went to 1.64 before pulling back a little bit. So it's still staying in a reasonable range that, as I mentioned, we don't expect the rate hikes to kick in until next year while we stay in these ranges. As I mentioned, oil eased off a little bit, and if you followed us last week, mostly due to a consortium of countries around the world with China, Japan, India, South Korea, US, easing up or freeing up some oil reserves to ease off the price at the pump, or help ease off the price at the pump, just ease off on the supply crunch against the demand increase. In fact, I think I read this morning that the US was going to release 50 million barrels from their reserves to help ease off the gas prices. Actually, other than the oil price dropping a bit, we're sitting around 75, 76 US a barrel right now, obviously off its highs in the 80s, but still holding in strong. We probably won't see much change at the pump, just because demand's still staying high, and that's probably not going away tomorrow, and especially heading into the holiday seasons. Copper edged up a little bit despite some bearish data, and we talked a little bit about that last week with a bit of slowdown in construction in China, mostly around the Evergrande real estate troubles that they've been in, but the global demand for copper continues to increase, so probably continued strength there. With that, that's it for this week. A bit shorter, as I said, just because I'm on the road. I'll see you next week, but if you have any questions, or you just want to reach out with some ideas for our weekly updates, go to mikeonmoney.com. Happy to hear from you. Yeah, and you can see all our other videos and content there as well. So with that, take care, everyone. Look forward to talking to you next week. Bye-bye.